Australian petroleum company Ampol released first half results today that have impressed investors. For the first half, Ampol reported revenue from ordinary activities grew 83.3%. Replacement cost operating profit NPAT more than doubled to $471 million. RCOP EBIT surged to $734.1 million. Total sales volumes came in at 11.5 billion litres, and a record fully franked interim dividend was announced of 120 cents per share for the first half of 2022. The fuel company said conditions driving refiner margins caused headwinds in other parts of the supply chain, including quality premiums, which rose to record levels as global markets responded to Russian sanctions and lower refined product exported from China. Conversely, the market volatility also created opportunities for the trading and shipping team to source, store and blend physical products and manage price risks using derivatives. On the business front, Ampol completed the acquisition of Z Energy in New Zealand, divested its interest in Gull and completed the rebranding of 1,285 sites, which are to be expected to be finished by the end of 2022. Future energy operating expense rose to $13.2 million as the company also launched Ampol Charge EV, a charging brand, in April this year and commenced rollout of the first phase of its electric vehicle charging network in July. In terms of broker ratings, Macquarie maintained its outperform rating on Ampol and increased its share price target on the company to $38.30 per share following the release of the results. On the investor front, Ampol stocks are trading more than 2% higher today amid a broad market sell-off, which indicates investors are pretty happy with the results shared by the petroleum company today.